Hi everyone, welcome to another Weekly Forex Forecast for the week ending December 4th, 2020. My name is Justin Bennett with Daily Price Action, and in today's forecast we're going to talk about the EURUSD, the Pound USD, the Australian dollar versus the US dollar, as well as the pound versus the New Zealand dollar. And we're going to wrap things up with gold or XAUUSD. Markets are finally starting to move. The EURUSD is on the verge of a breakout, as is the Australian dollar versus the US dollar. And the pound may have just broken out of one of the biggest patterns we've seen all year. We'll get to all of that and more in today's video, so let's get to it right now. A quick disclaimer that today's video is for educational purposes only. All views are my opinion and are not intended as investment advice. Forex is a high reward, high risk business, and you should not trade with borrowed money or money you cannot afford to lose. See the description of this video for the full disclaimer. So first up we have the EURUSD, and I talked about this on Friday where the pair is on the verge of breaking out of this 4-month range between 116.15 support and this 119.70 area. Now keep in mind that the top of this area could be as high as 120.10. This is something I talked to members about on Friday because it's this high back here. So 119.70 to 120.10 is going to be the key resistance area that the EURUSD has to break out of in order to see higher prices. Now, based on the way I trade, I do need to see at least a daily close above that 120.10 area to confirm the breakout. Last week I was scaling into a long position and I do still have that position on today. So I'm looking for 125 over the coming months. I do think that if the pair can get above this 119.70 to 120.10 area, that we could see 125 into 2021. Now, other key levels to keep an eye on are going to be 121.50 as well as 123.30. So these two areas up here are going to be critical factors. And if I move out to the weekly time frame, you can see why. So 121.50 is this low from back here. And 123.30 isn't as significant, at least through this area. But if you go back several years, you can see where 123.30 was a key factor. And of course, 125 is the top of this consolidation from 2018. And furthermore, the EURUSD is still holding above this symmetrical triangle on the monthly time frame. This is a pattern that we've been talking about now for months, and it is a 20-year pattern, so it's incredibly significant. And as I've said for a very long time, as long as the EURUSD is above that 114.50 area, I like the pair higher. And as you can see, we're well above that level right now. So my long position here that I entered into last week is very small. I'm keeping the position small until we do get a close above that 120.10 area. But given the recent price action here and the way we're kind of pushing into this region, I wouldn't be surprised to see a breakout this week. Alternatively, if we do see bearish price action develop up here or intense selling pressure come out and we start to take out some of these recent lows, that could be an indication that the EURUSD is going to turn lower to retest some of these lows down here or even 116.15. But as of right now, the more we pressure 119.70 to 120.10, the more likely it is that we will see the EURUSD eventually break that area and head higher into 121.50. At the start of this video, I said that the pound may have broken out of one of the most significant patterns we've seen all year. However, Friday did lose some momentum. So this is something I've talked about over the last few weeks, where we have this wedge pattern that's formed over the last 20 years. And I'll get to that in a moment, but as you can see back here, this level connects with this high. It also attracted sellers on this candle right here, but it looks like the pound closed above it last week on a daily closing basis. However, the weekly chart did not close above that area. So you can see here on the weekly time frame that that 133.40 area is still serving as resistance on the weekly chart. And if I go to the monthly time frame, you can see what I mean by this pattern. So this level back here extends from the pound's all-time high. And this falling wedge, as I've mentioned over the past few weeks and months, this does hint at an eventual push higher for the pound. However, the pair is still below that resistance area right around 133.40. So it could still take another few weeks or even months for the pair to break out from this pattern. However, I do think in the longer run, we could see the pound much, much higher given the bullish nature of this falling wedge. All right, but on the daily time frame, as I mentioned, it did fail to close above that 133.40 area on Friday. So instead of moving higher and holding above this area as new support, as we saw on these two candles right here, it did close back below that key level right there. So we could see sellers come out and push the pair a little bit lower this week. However, keep an eye on how it reacts at some of these recent lows on the way down. All right, if we do find support there and we start to hover just below this area, a weekly close above this region could take the pair up to 134.80. And if I zoom out here, you can see where 134.80 has been a key factor going back to 2019. So given the significance of this pattern, it may be best to play this on the weekly time frame. So in other words, wait for a weekly close above 133.40 and especially that 134.80 area. If you are going to scale into a long position, it might be best to keep that position small until you do get a confirmed break above 133.40, aka a weekly close above it. And of course, support going forward comes in at this May trend line. As long as this is intact, I do like the idea of a break higher, but don't rule out the idea of another rotation into support before we get that final push higher and break from 133.40 as well as 134.80. The Australian dollar is playing out perfectly so far. I talked about this last Monday, and what I mentioned on the 4-hour time frame is that we had this consolidation here in the form of a triangle that did hint at an eventual break higher. So you can see where these highs back here formed this upper level. We then had this short-term trend line based on these higher lows. And if you look at the daily time frame, here's what happened. The Australian dollar closed above this level on this candle. It retested that area as new support, and so far it's holding above it. And we've also trended higher up here toward that 74 resistance area. So if I zoom out, you can see where 74 is the key level that has to break in order to send the pair higher. Now, if we do get a breakout from 74, I do like the idea of a push up into the 77 area. So if we look at the weekly time frame and scroll back here, you can see where 77.40 was key resistance through this area. And of course, then after that, we have 81, which was the double top back through this area. But it's all going to depend on a close above 74, perhaps 74.10. That's going to be the area that buyers have to break in order to send the Australian dollar higher into 2021. So similar to the EURUSD, as long as 74 is intact as resistance, you have to be careful scaling into a position here. If you are, in my opinion, it's best to keep that position small until you do get a confirmed break above that 74 resistance area. And going forward, I do like the idea of 73.40 staying intact as support based on these highs back here. That was the breakout we saw last week. If we do get a close below 73.40, look to the 72.30 area, as I do think that could attract some buyers. But all in all, this looks constructive in that the Australian dollar trended higher back here. We then had consolidation. So a breakout here would be incredibly bullish for the pair, as it would for the euro. This pattern on the pound versus the New Zealand dollar is something I've been talking about now for months. In fact, I first mentioned this all the way back in July. So as you can see, we have this ascending channel that formed here on the weekly time frame. And I was looking for a breakdown ever since the pair came off of a smaller ascending channel through here. So I talked about this on the blog where we had this breakdown. We had a nice move lower into that 190 area. And since that time, the pair started to carve lower highs into 190. Now, I mentioned a few weeks ago that anytime you see this, that's an indication of an imminent break lower. But not only did we need a close below this channel support, we also needed a close below the 190 support area. So notice how 190 served as support back here, again through this area. So we needed a close not only below this level, but also 190. As you can see, the pair seems to have done that last week. So we finally got this breakdown, which could take the pair down here toward this 182 area. All right, so this is going to be the next key support, although keep in mind there could be some other support levels along the way based on some of these lows and highs. And also keep in mind too that the pair is a bit overextended. Look at where the 10 and 20 EMAs are on the weekly time frame compared to last week's close. So given this pair's volatility and the way it does like to overlap from week to week, I do think we could see a retest of not only this 190 area, but even some of these lows back here. All right, so this area through here is going to be critical for sellers to hold if we are going to see the pair eventually trend lower toward that 182 area. All right, so expect some consolidation here below 190, perhaps just above it. But as long as this area through here holds on a weekly closing basis, I like the pair lower. Of course, if it closes back above this trend line, that could be an indication that this was a false break. But as of right now, given the longer term downtrend here, and also the fact that we are breaking below 190, I do like the pound versus the New Zealand dollar into that 182, perhaps 182.80 area over the coming weeks and months. Gold, or XAUUSD in this case, hasn't done a whole lot over the last few months. So if you'll remember, we had this March sell-off back here, and then ever since that time, ever since this bottom down here, gold went on an absolute tear all the way up here toward 2075. But since this top, we had consolidation through here, broke lower, tried to break out from this consolidation but failed, and we're now down here towards 1790. This is a level I've been talking about now for some time. If we go back to 2011 and 2012, you can see where this 1790 area served as resistance. So notice how it was resistance through here in 2011 and 2012, which means that this area should serve as key support. Now keep in mind that this is an area, it's not an exact level. So Friday's close, even though it was just below 1790, in my opinion, that does not mean that this level broke as key support. All right, so this area could be as low as 1780 or even 1775. Furthermore, something I mentioned to members last week is that we could have a descending channel that forms here based on these two highs as well as this low. And if that's the case, we did see the pair tag that area on Friday. But just keep in mind, as I also mentioned to members, that this level could be as low as this one back here, which means that channel support doesn't come in until well below 1790, perhaps somewhere around the 17 handle. All right, so we could see the pair dip below 1790 before we finally see that reaction and a move back above 1790, followed by 1850. But I do remain constructive on gold over the long term. I still have my investments here because looking at the weekly time frame, the uptrend here is still intact, and this to me still looks like consolidation. It has been a bit more aggressive than I expected, but that's not that surprising given the current market conditions. And as I also mentioned last week, in my opinion, if you are using gold as a hedge going forward, I still prefer Bitcoin over gold. This is something that I've been talking about now since April, where I've been buying Bitcoin and Ethereum as well as some other cryptocurrencies. But I think that Bitcoin over the long term, over the next year or so, is going to outperform gold by several multiples. And I still feel that way. I do think that Bitcoin is going to outperform gold by a long shot. However, gold, as well as the gold miners, will probably still rally in 2021, but we are going to see some more consolidation here in my opinion. This isn't over yet. Even if we do see a bounce from 1790, the pair still needs to get back above this 1850 area, as well as this trend line off of these two highs. All right, so just keep in mind that we could see some more consolidation here. We could even see a further pullback again down to 1700, but do keep an eye on this area between 1790 and 1700. All right, based on this channel, whether it's here or it's here, this area is going to be critical for gold over the coming sessions. So I still like gold higher into 2021, but buyers still have more work to do, and I do expect gold to consolidate more before we see that eventual break higher. If you enjoyed this video, give it a thumbs up, leave your comment below, and be sure to subscribe to my channel. See you next time.